Happy New Year. My name is Bob Johnson. I'm here with my partner, Kelly Perkins, HP Wealth Partners. Kelly, we had a lot that happened in 2024, and I know many of you guys probably did get our newsletter that we sent out at the end of the year, our client letter, but some of you may not. And there's a lot of things that we talked about, and I'd love to be able to share some of that with them if that's okay.
Well, and a happy new year. Apologies if the 4 pages was a little too much. We thought we'd hit the high points. I think the biggest thing for me is realizing I always forget how much happened.
There's a lot that happened. I mean, we went from hurricanes to data breaches to two attempted assassinations on our incoming president to
Yes.
a CEO of UnitedHealthcare actually getting assassinated.
Yeah.
We saw a total solar eclipse. And then, I mean, there's a lot of the things. So I know we ended the year with like crazy fog and some type of drones all across the United States.
Absolutely.
So, I mean,
And
there's a
every
lot.
5 minutes, it was about the election and
Yeah.
political ads and the constant battling. It was the hot topic of every conversation was the debates or
Really,
the
yeah.
switch of the candidates. It was so much
Yeah,
up and
I think
down.
you put in the letter that, it's kind of like having, your quarterback in the fourth quarter get benched in Biden, and then they substitute a quarterback that has actually never taken a snap.
Never taken a snap.
It's kind of what we saw, wasn't it?
It was. I mean, it wasn't. I mean, you can't say it was boring
Oh,
for
no,
sure.
no,
And
definitely not boring.
I think we didn't even get into the wildfires hadn't even started when we wrote the letter.
True.
And so that's a whole nother can of worms that we're
Mhm.
kicking off 2025 with.
Was there anything specific in 24 that maybe wasn't necessarily a headline? I mean, it was something that happened, it was big, but was there anything that wasn't necessarily a headline that still had a pretty good impact in 24, but something that would maybe shifted for 25?
Well, I thought it was so interesting when with the bridge in Baltimore, when that collapsed,
Yeah.
I personally didn't realize how critical that waterway was to our supply chain
Hmm.
and to really a lot of the things that happen on the East Coast. And then we had
The
the
worker strike.
dock
Yeah,
workers
duck work strike.
strike.
Yep.
And that was interesting as well because they were protesting automation.
Hmm.
But I mean, it's going to happen. But the unions are putting pressure on these companies basically to not innovate and to keep things the way they are to preserve those jobs. So that really, for me, that was eye opening.
Hmm.
I thought that was interesting. There was
A
a lot of
lot of
trauma
stuff. Yeah.
stuff, but
Yeah.
that from an economic perspective, I was like, it's the whole interconnectedness that it reveals that when a tiny piece that
Hmm.
seems inconsequential breaks, it really does expose our weaknesses.
Yeah. And we have 25 now, and we got a lot of things that are happening in 2025. I mean, it's only been what I even know today is
2 weeks. I
two
know.
couple
What day
weeks,
is
11th or
it?
12th.
I know, right?
There's been a lot that's already taken place, but
Yeah.
a lot that we do look forward to because with that election, now over,
Yes.
and companies, I got to say, they're feeling pretty good about where they
Yes.
are, not because one candidate won or the other candidate won, just for the fact that it's over, right?
Absolutely.
Is that kind of what you're seeing
Well,
too?
2 years, virtually everything has been on hold. Almost every small
Mm.
business, every CEO, and a lot of individuals, everything's been on hold pending an outcome of the election.
Mm.
Not pending one way or the
Right.
other.
Yeah.
It's just this uncertainty because they had very different economic and basically monetary
Monetary
policy
policies. Yeah.
direction differences. Now that that's out of the way, we are seeing just a huge wave of confidence, not just in the markets. I mean, we
Hmm.
had a great day today, but people feel like it's okay
Yeah.
to dip their foot in the water, whether it's moving or buying a house or
I think, yeah, I
transitioning.
think as CEOs of companies, they've learned how to pivot either way. They just want to know the roadmap. They want to know, okay, am I supposed to be going this way or am I going
Mhm.
that way? And then once they know direction,
Yeah.
they can make decisions that impact the shape of the organization, the employees in the company. They just need that, and I think that's
Absolutely.
what the election being over gave them.
Absolutely. And there was a lot of just anxiety.
Uh-huh.
Almost every client I spoke to over the last year really had a high degree of political anxiety. I mean, the
Hmm.
media was driving so much strife,
Hmm.
and people, I mean, people legitimately were in an anxious
In
state.
anxious state, yeah.
So now we can all celebrate, the one fact that it's over.
I agree. That it's over.
It's over.
And 2025, you really feel good about the markets, and you feel like we're in a position where we can be thriving versus in a scarcity mindset, right?
Absolutely. There's so much cash that's
Okay.
still
Yeah.
accruing on the sidelines that's been looking for a place to go.
And everybody though keeps pointing to the Fed and like interest rates and talking about the Fed lowering these interest rates. And okay, that's great, I guess, in some respects, but we don't really need a zero interest rate environment for the US to thrive, do we?
We really don't. We've been getting drunk on cheap capital for so many years that I think we're ultimately needing to have a real rate of return for
Yeah.
cash free assets. We need, or for risk free assets
Risk-free,
like
okay.
cash and savings. I mean, think about, I mean, just checking 0.1% was the
Mhm.
interest rate, or savings.
Mhm.
They've been anemic for a very, very, very long time. So I think some degree of a little bit higher interest other than net
Yeah.
zero is going to be really important.
Yeah. Yeah, I agree. I think that the certainty of where we're going as far as after the election, now we know how to move forward. Cheap isn't always the best, right? Free
Yeah.
isn't always the best. So a little bit of understanding of, hey, it's a thriving economy isn't zero interest rates, right?
Right.
We need to have a more stable environment so that businesses can make these decisions, our economy can be healthy, and people will start, even consumers will start making even better decisions because they're pretty strong right now as it is.
Right. Well, and that was a big thing, that the numbers keep coming out
Uh-huh.
stronger
Yeah.
than anticipated. The consumer is still moving forward and still very, very strong.
Hmm.
And that's really helped us. I mean, consider the fact that we weathered, you know, a very aggressive Fed rate hiking
Hiking. Yeah.
cycle, and the market's now at an all-time high. We hit 40,000 last year, and we're
We're already,
nearing,
yeah,
yeah,
we're
I
already
mean, we're
43,000 now. I mean, can we hit 50?
at this rate, goodness. But people are always looking for for the other shoe to
Yeah.
drop. And I just think that we're in a very exciting time, both economically, but also as a country.
Mhm.
And I think people are really starting to look at what's real and what's not.
Yeah.
That's really the big revelation from 24, was challenging the status quo, challenging the media, and asking deeper questions about what's true and what's not.
Not just the headlines,
Not just that,
right?
yes.
Yeah, it's the bark or the bite, right?
Yes.
And the headlines ends up being the bark, and the reality behind what that data was telling us was that the bite really isn't that bad.
Right.
Yeah.
I mean, the headlines were saying, we're going into a recession,
Hmm.
and that leads us to a lot of these every year.
Hmm.
There's huge, like, I have 40 or 50, like you were
Yeah.
discussing, economic outlooks. What's coming for 25?
Well, yeah. Okay. So, like, okay. Speaking of that, it's 2025. Like day one, everybody's forecasting what the market's going to do.
Right.
Right? Everybody's going to forecast. Oh, the market's going to do this. This is what we're planning. I mean, it's almost impossible, if not, it is impossible
Yeah.
to truly forecast the stock market over the next year. But there's things that we do with our clients. There's things that we recommend to our clients on best strategies.
Absolutely.
Yeah, it's not really a forecast. It's like let's really sit down and understand where they are,
Yes.
right, and what their life is going to look like over the next 12 months, 24 months, 36 months, and then we build a strategy around that, not around a forecast of a market.
Right, because it's like throw a
Yeah.
dart at it. I mean, throw a dart at a number. Where is the S&P going to be by year end? Do you really care if your portfolio does well and we meet your needs and we exceed the general markets?
Right.
I mean, it's really funny that if you look at all of the annual forecasts over the last 10 or 15 years, a staggering number of them are way off and continue to be way off.
Mm-hmm.
So they're using,
Yeah, we're not really looking. I mean, forecasts are nice. I guess we do look at them, we do use them, and all that kind of stuff.
Sure.
But we're not modeling to a forecast. We're modeling our clients' portfolios off of our portfolio, but their life, right? What do
Right.
they see over the next 12, 24, 36, and so on months? I mean, what do you see, I guess, that could potentially be some of the greatest risks that our financial markets have in 25?
I think, I mean, it's again top of conversation for, I mean, for many years now is the concentration. The
Mm.
concentration at the top, we're calling it Batman now.
Yeah, because it went from what? It was Fang,
Fang,
and
and
then it went
then,
Magnificent Seven. Now
yeah,
it's Batman?
Batman,
All
because they've
right.
added Broadcom, Apple, Amazon, Tesla, Microsoft, Meta, Alphabet, and Netflix, and
There
it
you go.
spells Batman.
There you go. Two
But
A's.
the top 10 holdings, those holdings are now an over almost 40% of the S&P 500.
Mm.
So if something catastrophic were to happen to one of those stocks,
Mhm.
we would see a cascade effect, not just in the markets,
Mm.
but all of the infinite ETFs, mutual funds, and active strategies that are mirroring the S&P 500. With that kind of weight, that's the risk, is
Mhm.
that we have something that happens to one of the bigs that's
Mhm.
driving these markets. 85% of the returns from last year came from those 10
Yeah.
stocks. And if a few of them start to falter,
Mhm.
that's why we're seeing, and that's why what we do
Mhm.
isn't just system. We're not plug and play putting people into these automated ETF or index
Right.
holdings, because I
Holdings.
think there's true risk there.
Yeah, I mean it's a computer-based model that all they're doing is just modeling that out in percentages, and you're going to get what you get, and you're
Hmm.
going to own a lot, and you're going to own the world, and when you don't really need to own the world. And I think
Yeah.
being more tactical and specific with our decisions in our portfolio allow us to enter and exit um,
Yeah.
much better and more efficient for a client really to maximize that return.
Well, and looking at the world, I
Mhm.
mean, we have to be very cognizant in terms of what are your exposures to international industries or
Mhm.
countries that are having problems.
Yeah.
If there's a leader that's being, kicked out or
Mhm.
pushed out, you don't want to own
You
their
don't want to own their
bonds, you don't want
bonds,
to own
right?
companies.
Yep.
You got to be really tactical about today's market. Ditto, we're waiting for a big report tomorrow to see if there's
Mm.
potentially any stressors on any of the California tax-free municipal bonds.
Yeah.
What do these fires, how will those impact? And furthermore, on the individual bond portfolios that we manage, where's the exposure? What's the harm? Do you sit on the sideline until we have a better picture?
Mhm.
We're not in the business of financing California through it. We have to
Mm-mm.
protect our
We have to
clients
protect our
first.
clients first. Yeah, absolutely.
That's always the primary goal. And with a lot of these firms that set it and forget it and just
Yeah,
automated trading, you just miss that whole
and it's interesting. It's
protection.
coming from pretty much all the big firms. I mean,
All of them.
right, and the big RIAs. I mean, it's a model, and granted, hey, AI is good for some things, right? And we can talk about AI a little bit,
Yeah.
but it's not good for understanding and managing a portfolio to the level that we want to for our client,
Agreed.
right? We can't use AI for that. It doesn't make any sense. It doesn't replace experience.
Yeah.
It doesn't replace the ability to make a very tactical decision on an investment, whether you should or shouldn't stay in it, and how you should invest
Yeah.
that particular purchase, right? Because of whether it's tax free or non taxable. I mean, like you got to really know what you're doing, and that's our specialty.
Absolutely.
Um, so tell me a little bit about, I know we talked some about, asset-based lending before, and,
Yes.
and, and I want to make sure we kind of talk about that. I'm not sure if we talked about it in our letter or not, but that's something that we provide to our clients. So we have a lending arm within our company through traditional lending or asset-based lending. So let's kind of talk a little bit about that if you can.
Well, what's exciting and what's really, really created a big
Hmm.
buzz for us is being able to create loans for people
Hmm.
that don't need a traditional mortgage
Hmm.
or in between several purchases, and being able to continue to manage the account
Hmm.
without having to liquidate anything
Right.
and facilitate a payment strategy.
Mm,
either out of the account or from other sources, and being able to close it down in an instant if
right.
we need to pay it off.
Right.
Or I mean, the flexibility is really dynamic to be
Yeah.
able to manage debt the way we manage an account.
And a little bit more specifically on that, because some may have glazed over on that
Yeah,
part of
sorry,
debt
I
management
jumped
and all
by.
that
I was
fun
like all
stuff.
into the weeds.
But the reality is, like, what happens, and it's for people that maybe are looking for a traditional loan, but when they really look
Yeah.
at the options, they're realizing, this is a better way to finance something, right? This is a better way to structure the debt and debt service that, meaning making the payments for that
Yeah.
client. But what it is we're looking at your investments. So it's like a line of credit. And somebody was like, oh, it's like a HELOC off my house. Well, from a real estate standpoint, yeah, it's like a HELOC where you get a line of credit off the equity of your home and you're paying it. Okay, take it over here. This is just a line of credit off your assets. So, if you have $1 million and you're needing to buy, a $500,000 house, do you want to take a portion of that $1 million and use for a down payment and the closing costs and the fees that go along with all that? And you could spend, in fees, $10,000, $12,000 plus the down payment and everything else, right? This is really a a line of credit that we would give you. Let's say it's
Mhm.
$650,000, 65% of that $1 million, and you're writing a check for that house at 500,000 with no fees, right? And so it's saving you a significant amount of money up front, and it just becomes an interest only loan. So it's a really strong way to acquire really pretty much anything you want, because it doesn't have to just go for homes. It can be for anything, second homes, boats, things of that nature. But it's a great way for us to take a look at the investments that you have, see if there's an opportunity to create a line of credit for anything that you want to purchase in the future, and keep the money in the market still
Mhm.
growing. I think that's the biggest takeaway, is you're not cannibalizing that. It's staying active.
Well, and one of the strong points is
Mhm.
that the interest rate changes monthly.
Yeah,
So as rates come
those
down,
rates are going to go
you
down.
immediately you're not locked into a
A 30-year
rate,
fixed, right?
right, which
Yeah.
are a little bit higher right
Well, I mean,
now.
yeah, I mean they're in the 90s, right? 1990s rates. I mean, we're starting to see those 7% rates hit, and if you're getting interest on loans lower than that, then it's going to be great, and it's going to continue to decrease as the Fed continues to ease. Yeah.
Well, that's exciting. I'm excited about 25.
Oh yeah.
We're we're seeing people really now more than ever unafraid to move forward, make
Mhm.
some changes. We found out through multiple reports that both consumers are healthy, their savings rates are higher than anticipated. We've got a market that weathered really the perfect storm, and the Fed is now on a trajectory of lowering rates, and you already have a lot of cash sitting
Mhm.
out there. I think it's the perfect opportunity
Yeah.
to really not be afraid to
Mhm.
be tactical in the market. I mean, one of my favorite stocks last year was GE. That is not exactly, a high risk
No.
profile stock.
Uh-uh.
And it outperformed some of the tech stocks.
Hmm.
But that's the kind of investing we're able to do,
Hmm.
even being
It's
conservative.
conservative, right?
Yes, and you're
It,
going to outperform
well,
your
we're
CD
offering. I mean,
or
like what we're seeing is our portfolios are really performing well, and it
yes,
carries less risk,
yes.
right? So if we're exceeding expectations and we're carrying less risk, it seems like it's a win.
It is a win.
Some of the other things, guys, and we'll cut this off pretty quick, but we also do events and things like that. So if you want to be included on an event, if you want to get into our newsletter and start to get those, just shoot us a DM at the bottom or whatever, or a message at the bottom, and we'll make sure to add you to that. But some of the things that we like doing for our clients and our potential clients is we host events that are really geared around things like what's happening in the market. We did a lot with that happening in the election. We're doing one that's talking about stages of life,
Yeah.
right? And the importance of each of these milestones and these things that should be celebrated, like reaching 65 or turning 18 or getting married. There's certain things in our lives that, as our clients, they become our family too. We want to walk those things through with you, and it's exciting to be able to do that, to share what those milestones are and make sure that you're guided in the right way. So if you ever want to be part of any of that, you just need to let us know so we can hook you up.
Absolutely. Well, and we're happy to do that because we've lived all these stages.
Hmm.
and we're approaching them. And I think the event that we're looking, our upcoming event is about talking to your parents and helping them
Hmm.
really get a handle on and be more transparent about their finance.
Oh, come on, Kelly. The thing is called talking about the F bomb. Let's talk about the F bombs, right?
Yes,
It is. It's awesome.
it's
It's
true.
finance, it's family, and it's the future. And
Yes.
it's the conversations that most of all of us have avoided, or our parents avoid.
Yeah.
We're not going to talk to our kids about that. But the kids just really want to know and help, and those are the F bombs. So it's going to be fun.
Well, I can't wait. I mean, because I think everybody's, anticipating it'll be a
It'll
lively
be a
and
lot
a
of
fun
fun.
conversation.
Well, guys, this is just a recap of what we experienced in 2024, what we're looking forward to in 2025 from our newsletter. So we appreciate you guys hanging in there and watching this and listening to it. Look for more things coming on our HP Wealth Partners channel, and otherwise, make it a great day.
Happy New Year.